Welcome back to another video, guys, and in today's video we're talking about support and resistance levels, how to effectively trade these levels and make consistent profits. Basically, for beginner traders. If you're an intermediate trader, this video is for you as well, so stay tuned to the end of the video. But before we get started, if you're new to the channel, please do it to subscribe, and to my returning viewers, shout out to you guys. So let's get to it. So when trading the support and resistance levels, there are basic things we should take note of. There are basic things we should know. I'll be showing you guys a sketch of how the support and resistance levels in the market looks like. For example, this is the market formation. So you can see the market giving us moves like this. Not really a perfect move, but you can see the market selling off from a high and buying up from a low. So let's call this our market formation basically. And this is our market formation. We can see there are levels at which the market got to at the upside and reversed back to the downside, and there are levels at which the market got to at the downside and reversed back to the upside. These levels at the upside are called the resistance levels, while these levels are called the support levels. So let's identify these levels. So this is our level of resistance, while this is our level of support. We can see whenever the market gets to this point, it bounces off. Whenever the market gets to this point, it bounces off. The same thing happens here, it bounces off. Market bouncing off this zone, bouncing off this zone, bouncing off this zone as well. And the market selling off from this zone, rejecting from this point, rejecting from these zones, and rejecting from these zones. These zones at the upside are basically our resistance levels, while these zones at the downside are our support levels. So how do we approach the market using this strategy? We don't just buy at any support level or sell at any resistance level. There are things we should take note of. There are things we should consider before buying or selling at these levels. So I'll be showing you guys an appropriate way to looking out for confirmations on those levels before you can buy on those levels or sell on those levels. Before we take any trade on those levels, we should wait for confirmation. So what are these confirmations? That's what we'll be talking about in this video. So one of the confirmations we need before we take any buy or sell trade on these levels is, see the market giving us an impulsive move to those levels is a number one thing we shouldn't overlook, because impulsive moves can easily take out those levels. But when we see the market moving in a choppy way, like moving sluggishly to test those levels, there are high chances of the market bouncing off those levels. And other things we should consider before taking any trade on those levels are reversal patterns, formations, or candlestick rejections on those levels. You can see the market giving us a couple of candlestick rejections on those zones, and you can as well see the market giving us a reversal pattern like a W formation, an inverted head and shoulders pattern, or a head and shoulders pattern basically. So we can see either of these formations on those levels, and we should put these things into consideration before we can take any trade on those levels. So I'll be showing you guys a real market formation of how these support and resistance levels looks like and how you can get into it with a previous market move that happened, and we can see how the market reacted to those levels and how the market moved after those formations. So let's get to it. So we're having a market look on GBP card on the 4-hour time frame. So you can see at this point the market formed a level of support as well as a level of resistance at this zone. At this level of support and level of resistance, because you can see at this point the market got to this point, bounced off this zone, sold back to this level, and when the market got to this level, it went back to the upside. Coming back to this level gave us a fake breakout. You see, one of the reasons why I say we don't just buy on any support and resistance levels, we should always put some things into consideration. Like we saw on these points, the market gave us a move to this level. We were expecting the market to reject from this zone, but instead the market gave us a push out of this level, stopping out those who sold at this level. If you had your stop loss at this level, definitely be stopped out, because the market didn't give us a rejection from this zone. Instead, the market pushed to the upside, finally gave us this rejection candle at this point, then sold back down to this level to go test our level of support again. And you can see the market got to our level of support, gave us a rejection back to this level, and sold off from this zone back to this our level before breaking above this level. So how do we take advantage of these levels without getting stopped out or without exposing our accounts to risk or losses? So we can see at this point the market gave us a move to this zone and sold back to this level, then came back to the level and bought back to the upside. Let's say we want to take a buy trade at this level, so we have to go to the lower time frame, like the 15-minute time frame or the 1 hour time frame, to look out for market formation at this zone. So let's move to a lower time frame. So this is the 1 hour time frame basically. So on the 1 hour time frame, we can see the market give us a rejection at this point. You can see the market rejection at this zone, this candlestick rejection, which is nice, which is the number one information that we need. Despite giving us a rejection at this point, despite giving us a rejection at this zone, there are things too we should consider. You can see the market give us a first drop to this level. If you're the type of trader that just get into the trade at this point, maybe you are buying at this zone with your, maybe you are buying at this zone and maybe you had your stop loss at this point, you got into the trade without confirmation, you had your stop loss at this point, definitely you'll be stopped out, because you can see how the market moved afterwards. Though you bought at this level, that yes, that's not wrong, but you can see afterwards, after giving us a little move to the upside, the market came back down again to go stop out those who sold without confirmations, and you can see that stop loss is being hit. But before we get into this trade the right way, so the right way to trade in these levels is waiting for confirmations. Like we mentioned on our sketch, that we should look out for reversal patterns like W formation, or the inverted head and shoulders pattern, or the right head and shoulders pattern, the proper head and shoulders pattern for sells, while this for buys. So like we mentioned on our sketch drawing, that we should look out for these confirmations, this pattern formation, and we got one here at this point. You can see the market giving us what, a low, then pushing back to the upside, coming back to retest again. This particular formation, this is the formation that we saw at this level. You can see the market giving us a double bottom formation at our support level on the 4-hour time frame. Remember, we spotted these levels as our level of support and the upper one as a level of resistance. So on a level of support, I'm looking at for buy opportunities. We want to buy this trade, we want to buy the market at this point. So we have to wait out for confirmations like a reversal pattern, a candlestick rejection. Reversal patterns could be inverted head and shoulders pattern, could be head and shoulders pattern, could be double bottom formations or double top formations. So we got our double bottom formation. Then we had our neckline at this point. Whenever there's a pattern formation, there's always a neckline. Beat the inverted head and shoulders pattern, there's always a neckline at this point. So you have to wait for the neckline to break and a retest for a continuation. And beat the double bottom formation, there's always a neckline. So you have to wait for the market to break out of the neckline. It was a retest and a continuation. And we got one at this point basically. You can see we had a retest of our neckline. You can see the market giving us a breakout of our neckline. We got our double bottom formation at this point. Yes, that's right. That's one of the confirmations that we need, and we saw it at this our level. So next, we wait for the market to break out of the neckline of our reversal pattern, and we got a breakout of our neckline, which is this level. And the breakout of our neckline, you can see the market giving us a retest. We had a breakout. Yes, we had a breakout of our neckline, but you don't just get into the trade at the breakout. If you are to buy at this point, maybe our stop loss at this level, definitely will be stopped out with this candlestick wick. So you have to wait for the market to give us a nice breakout, then a retest like we got at this point with a candlestick rejection. So we got a nice breakout of this level with a retest of our zone back. So where are we to get into this trade? To get into this trade at the open of this candlestick, like at this zone, because I've already seen our rejection week at this point, because we got our double bottom formation, we got our breakout of neckline, then the retest, that's what we're waiting for, which we got at this zone. So we have to take our buy trade at this point. This is how we get a nice buy on this our support level, and you can see how far the market moved. Take profit level be at our resistance level that we spotted on the 4-hour time. You can see our level of support at this point, our level of resistance at this point. So our profit target level will be at our resistance point. So that's where our profit target will be. Then we got the market buying up to this level. You can see how far the market moved. We had our stop loss, a stop loss of like 13 pips, no, 21 pips basically, and our profit target of 144 pips, which is massive. Almost 7 is to 1 risk to reward. Like we're risking 1 to get 7. You can see how massive the market moved after giving us this pattern formation that we need, this double bottom formation that we needed, a breakout of the neckline, a retest, then we are buying up. And you can see the same thing happened at this point as well. The market gave us an inverted head and shoulders pattern, which is nice. We talked about this in our sketch. So you can see the market gave us a breakout of our neckline, but we didn't really get a nice retest on this our neckline. But still, this is a nice trade. The market moved after giving us this inverted head and shoulders pattern. So you can see the market gave us what, the left shoulder at this point, the head at this point basically, and the right shoulder at this point. You can see how massive the market moved. Okay, let's assume that you bought at this level of support. Like when the market dropped to this point, you just entered your buy trade with your stop loss maybe at this point. Definitely you'll be stopped out with this head pattern formation that we got. The market is still trying to form, so taking your trade at this point would actually make you good money. Since we didn't get a retest of our neckline, then our stop loss will be below our right shoulder formation. You can see how massive the market's moved. Please do it to like this video. If you're new to the channel, please do it to subscribe. And to my returning viewer, shout out to you guys. You guys are the OGs. Let's keep doing what we do, guys, and do have a wonderful day. Peace out.